May profits be upon you. Welcome back to my YouTube channel. This is RT Money representing Lions Den FX. Listen, we're going to break down New Zealand dollar yen, NZDJPY. We're going to do some top-down analysis, and we're going to look at a possible setup. All right. First thing I want to do is start out at the weekly and say, hey, which way are we going? What is the bias? All right. Where are we trending? If you have trouble answering that, looking at this picture, the first thing you want to do is look at this row of succeeding bullish candles, right? 1, 2, 3, 4, 5, 6, all of them representing a week each, right? You know, we've been a month and a half of bullish candles. Is there any reason to think that the next candle won't be bullish? Do we have a reason to think that this is just going to turn bearish all of a sudden? No. So, you know, that's one thing. But the question that is definitive in this answer is, where is the last break of structure? All right. The last break of market structure, if we look closely, we'll see that this pullback here, this low, this impulsive bearish impulse here, right? This impulsive bearish impulse, sorry. All right. Comes down low here. We get a pullback and then we break that swing low. That is a break of market structure here. Okay. That as soon as that happens, we can say the market is bearish. The market is bearish, right? But we see that we have these bullish candles, one behind the other, and we break the high, the swing high that broke that low. All right, we broke that high, and we can now say the market is bullish. Fair enough? All right, pretty simple, right? Pretty straightforward. Okay, so let's move over to the daily. All right, let's take a closer look at the price action, something I want you to notice. All right, something that will confirm the order flow in the market that you're looking at is if we're breaking zones of demand or supply as prices moving in that general direction. Watch. In this case, we had this was a supply zone, right? This was a supply zone before all this came, all right? Price is coming down. We make this supply zone here. We flush to the downside, break of structure. All right. Then we come back up and we find ourselves rejecting from this supply zone. So what you want to watch is the reaction. Okay. The reaction is very important. So price reacts to that supply zone, comes down, and this is the extreme of the reaction. All right. Now it doesn't become important until we break through. Now this is a broken zone of supply. Got it? Now, why do I have S2D in there? Because what happens is, what happened was, once it breaks supply, you're coming back to your extreme reaction. All right. This is where you can take a high probability trade if price should come back here to the upside. This is going to be a high probability long. All right. Because the reaction here, the extreme of the reaction, the pullback of the reaction and the extreme makes for a very powerful demand zone. All right. It was strong enough. This low was strong enough to break this supply zone, right? And once price comes back here, it is a demand zone now, and we can take that long from here, and you can see how price reacted to it. So that's a couple of things you want to draw from this. One, we have signs that there's a lot of strength in this momentum to the upside. Two, we have an area where we could have taken a very high probability long position. Got it? That's your takeaways. All right, let's go over to the 4 hour. We'll take a good look at this price action. Now, we can see Oh, I forgot to mention. Let's go back. All right. Got this supply zone up here, right? 1, 2, 3. This is where the buying starts, and then we have that very aggressive bearish impulse to the downside. All right, that's what we want to see. We'll come over here to measure the reaction to the supply. All right, are we going to pass through? Are we going up here to take out the liquidity points that are higher? Well, let's go to the 4-hour. All right, we're going to test. We're going to look at that reaction. Now, on a lower time frame, this is where you look for intraday setups. All right, 15-minute down to the 1. All right, what the kind of steps we're going to take are counter trend. They could be very profitable. Counter trend trades are not as high probability as pro trend trades. All right, you want to take trades with your best friend, the trend, if you can help it. But there's a lot of money to be made with counter trend trades. You just have to take confirmation trades, and a confirmation trade will look like a high, a pullback, a high that breaks that high, and then a pullback that breaks that swing point. All right, and breaks it to the low side. In this bearish impulse, price is going to come back or return to impulse. All right, and wherever that price found the impulse to break this lower structure, this swing point, that's where you want to take your high probability trade to the downside. All right, and a higher probability trade, again, this is counter trend trade. I'd rather take trades that are pro trend, but on an intraday basis, yeah, I will take this trade. Now, the way I would mark it out is I'm looking for chalk. All right, I'm looking for a chalk, and I would go down straight to the 15. All right, from the 4-hour to the 15, I'm looking for evidence, an early sign that price is turning over in this supply. All right, and that's the only time chalk is relevant, when it's at a point of mitigation. Okay, so what you want to see is highs made and highs beaten until we're at the highest point. You look to see, it's clearer on the 1 minute, the 1 hour. All right, you're looking to see the highs being beaten, right? Until, nope, this isn't it. Yeah, it is. Yeah. You want to see a higher highs, right? Until you see this. This one is the first one that doesn't break that high. The high of the candle prior to it. All right. So I always look to mark out the bottom here, the low of the candle. If I can just get a mark here, I don't understand what's going on. Okay. All right. And I'm waiting for, that would be my chalk line. CHOCH, change of character. You're looking for price to show evidence that it wants to switch from bullish momentum to bearish momentum. So I'm looking for it here. All right. Now, if this low gets beaten, like by this one, that I change to this one. Okay. This is as simple as that. All right. If once you have that high, once you have the high made, all right, you're looking for the highest point, the lowest point before that high is made. Here. Got it? All right, you're looking for the low that led to that high. Okay, and this would be it. And if price breaks that, now we have chalk. We have a change of character. All right, and all I needed to do is wick past it. All I needed to do was wick past it. It comes back up, and you're waiting here for price to return to the impulse. We're waiting for price to return to the impulse here, and that's where you can take an aggressive entry for a trade. Boom. Put your stop loss above the order block in which you enter, and You just take it on down. You wait for price to come back. That's all. That's all you got to do. All right. We have a break of the chalk line. All right. The low here. All right. And you wait until price comes back to it. It comes back. This is where you enter. Your stop loss is safe because the idea is that this is a protected price point when you're using order blocks. All right. And that's it. You wait for that. Now, the difference here between chalk and a break of structure is that this confirms, this is a break of structure here. This confirms that price is changing from bullish to bearish momentum. That confirms it. This one gives an early warning sign or early alert that price is likely changing. It gives the earliest evidence, and this could be wrong. All right, but I will take this setup. And if you take it 10 times in a row, you're probably going to win between 6 and 8 times. Okay, average of 7. All right, just back test it. You'll see. But that's the difference. This one confirms when price breaks this, we can say the market is turning bearish. All right, this is a structure point, an impulse, a pullback, not just a little, side to side action, a pullback, and then a break of that high. And then if we get a break below this low here, this pivotal low, then the market is turning from bullish to bearish impulse. Anyway, that's it. Now, if we go back to the analysis, what am I expecting? I'm expecting NZDJPY to continue higher. I believe the New Zealand dollar is going to be stronger against the yen. The yen is going to get weak, and we're going to go up. We're going to go up higher. The deal is where do we get it? I'm looking for price to pull back, which is why I was looking for price to turn over here. I'm looking for price to pull back. Where are we going to pull back to? Well, we got a couple of POIs here. This would be an interesting place for price to find itself pulling back to. Okay. All right, because we have a lot of structure over here, and I think this is an interesting landing point. All right, what do I want to see? If you use a Fibonacci retracement tool, this is a lot to explain. If you use your Fibonacci retracement tool, right, you can find this trading range from this higher low to that higher high. All right, this is the pullback, remember. And for the higher low to make the higher high, the 50% is the equilibrium of this trading range. Neutral, right? What you want to see is price come back into what is called discount prices or premium prices. Premium prices up top, discount prices on the bottom. All right, you want to see price come past that 50% mark. And this would be a great spot for it to do it. All right, so this is going to be one of my POIs. I'm looking for price, looking for the reaction once it gets here. I'm looking for the reaction once it gets here. I'm not just going to enter in a buy as soon as it gets here. No, I want to look for the reaction because I need confirmations. Confirmations. That makes all the difference in the world. All right, so I'm moving this over to the side. All right, so this would be my first place. This would be one of the first places I look. And if it comes down lower, if it breaks those lows, if it breaks that low, and I'm not so sure it will, but if it breaks those lows, then I'll be looking right here as my secondary, a second spot. All right. So this is probably be around 618 on the Fibonacci retracement tool. 618, this probably be around 789, right? This is where I'm looking. I hope you benefited from this analysis. I hope you benefited from my videos. If you did, if you like what I'm trying to do here, smash the like button. make sure you hit the subscribe button and hit all of the notifications so that you can make sure, hit that bell notification, man, so that you can make sure you don't miss my updates. All right. I post frequently in the community tab of this channel. You want to check that for updates. You want to also make sure you join the Telegram group. The link is in the description for Lions Den FX, and get some freebies over there. You know what I mean? From us. At Lions Den FX. All right. Also, if you have a request for a market that you want to analyze, make sure you leave a comment or question in the comment section of this video. I really enjoy talking to you. I enjoy communicating with my peoples. All right. Make sure you trade safely next week. I'll see you in the markets. Check out the two videos that I have up on your screen right now. And stay vigilant, man. All right, because you have FOMC on Wednesday. That's going to have a big effect on the markets. Okay, big effect. I'm expecting the USD to gain some strength with that decision. You'll see it. All right, and that's going to have a reverberating effect throughout the other pairs. All right, I'll see you soon, I guess, in the next video.